All right, so that is the big deal and big news break here on CNBC TV18. The Competition Commission of India clearing the way for the Disney Reliance Industries deal. Moving on, RBI Governor Shaktikanta is addressing the Global Fintech Fest. Let's cut across live to it.
All of us strive to enhance financial inclusion, optimize digital payments and harness emerging technologies like blockchain and artificial intelligence. We also confront the inherent unpredictability and interconnectedness of the global financial system. In this environment, developing a mindset that anticipates disruption and embraces change with prudence becomes very, very important. Financial institutions and fintech startups alike must therefore adapt swiftly, leveraging agile strategies and robust frameworks to capitalize the new opportunities while mitigating the connected risks. It's up to the stakeholders in the Indian financial ecosystem, banks, non-banks, fintechs, regulators, and the government to foster innovation with resilience. While the fintech ecosystem is ushering in much needed personalization and contextualization of finance for consumers, the context needs to be broadened to build a financial system that serves the broader society. To achieve these, I wish to propose the following 5 policy priorities for the future of India's financial system. The first policy priority would be digital financial inclusion. As a policy priority, financial inclusion should ensure that everyone has appropriate access to financial services. The Reserve Bank's Financial Inclusion Index, which we launched in 2021 and which measured 53.9 in March 2021, has gone up to 64.2 in March 2024. So from 53.9 in 2021 March, it has gone up to 64.2 to this year's, that is March 2024. As a country, we have succeeded in ensuring banking access to every village within a 5-kilometer radius or a hamlet of 500 households in hilly areas. So far, 530 million Jan Dhan accounts have been opened under a national mission. And incidentally, as I am speaking to you, the Jan Dhan scheme of the government has completed 10 years since its establishment, and its progress is there before all of us to see. Initially, the apprehension was that all these accounts will be zero balance accounts and there will be no activity, there will be no sort of transactions taking place through such financial accounts. But I think the experience over the last 10 years has completely belied such apprehensions, and today there are 530 million Jan Dhan accounts, most of it, in the name of women, and many of it in the name of women, and the total savings bank savings in these accounts, I don't recollect the number, but it is a huge amount. And I have to also mention that of the Jan Dhan accounts, 66% of the accounts have been opened in rural and semi-urban areas, and 55% with women beneficiaries. While significant strides have been made in expanding financial inclusion, the evolving landscape demands a shift towards digital financial inclusion. That is, promoting secure and digitally enabled financial services and products for the financially excluded and underserved population. Digital financial inclusion has the unique advantages of scalability and cost effectiveness. Accordingly, the next 2 decades will predominantly be about leveraging technology to deliver accessible and tailored financial services that meet diverse needs. In the pursuit of digital financial inclusion, fintechs may strive to offer innovative and accessible financial services, bridging gaps in traditional banking with digital payment solutions, microloans, and affordable insurance. They can enable seamless access to financial services in remote areas through mobile banking apps, digital wallets, and online lending platforms with superior and safe customer experience. The use of data analytics and AI could further enable personalized and efficient financial solutions. I would now like to highlight and speak on priority 2. I said that there are 5 priorities I would like to highlight. Priority 1 was digital financial inclusion. Priority 2 is digital public infrastructure, or DPI. The second key policy priority would be to further deepen digital public infrastructure. DPI, which encompasses frameworks like digital identity, that is Aadhaar, universal fast retail payments, that is UPI, and targeted payment solutions like platform for bill payments, will enhance the efficacy of the financial system in general. They would be key tools to promote interoperability, transparency, and cost effectiveness. New DPIs could address emerging challenges such as frauds, cyber threats, data privacy, and other concerns. They could also support the integration of advanced technologies like blockchain and AI to enhance security and efficiency in financial services. Continuous innovation is crucial in harnessing technological advancements and maintaining a competitive edge in the global financial landscape. One significant initiative in this direction is the Reserve Bank's pilot on Unified Lending Interface, that is ULI, earlier known as the Public Tech Platform for Frictionless Credit. ULI aims to enable lending institutions to offer frictionless end-to-end digital credit by leveraging consent-based data and related services. There are about 50 such types of data services on the ULI platform. Apart from banks and NBFCs, we are now focusing on inclusion of other lenders like cooperative credit institutions through the NABARD. A full-scale launch of the ULI will be done in due course. As I said 2 days ago in another event in Bangalore, the new trinity of JAM, UPI, ULI will mark a revolutionary step forward in India's digital public infrastructure journey. Priority 3 that I wish to highlight is consumer protection and cyber security. Ensuring robust consumer protection is crucial for upholding trust in the financial system. As consumers are increasingly relying on digital financial services, their expectations for personalized, efficient, and seamless experience are also growing. Alongside traditional risks such as mis-selling and fraud, new manifestations of consumer risks such as data privacy and security breaches have emerged with the advent of new technologies. Leveraging technology for real-time monitoring and ensuring regulatory compliance will be essential to address these challenges effectively. The Digital Personal Data Protection Act 2023, that is DPDP Act 2023, is a cornerstone in India's consumer protection landscape. It marks a significant shift towards safeguarding personal data. This act enshrines the principles of data minimization and purpose limitation to ensure that organizations collect only necessary information and use it solely for specified purposes for the required period of time. It empowers individuals with the right to access, correct, and erase their data, thus giving consumers greater control over their personal information. This act incentivizes businesses to adopt robust data protection measures, which will ultimately enhance trust in the digital transactions. Dark patterns such as misleading buttons, hidden charges, and forced continuity have become big concerns in the digital marketplace. The Guidelines for Prevention and Regulation of Dark Patterns 2023, issued by Government of India, is an important step to protect consumers from unfair application of technology in businesses. These guidelines aim to identify, prohibit and penalize restrictive and misleading practices so that consumers can make informed choices. On their part, banks and fintech NBFCs are expected to adopt a customer-centric approach, implement robust security measures, offer transparent financial products, and adopt fair lending practices.
All right, on that note, we take a short break here on CNBC TV 18, but don't go anywhere. News continues on the other side.